I want to now talk about one of the biggest areas where the ATO believes that most property investors make their mistakes in terms of is this whole concept of what's repairs, what's improvements, what's replacement of something in its entirety. These are those fundamental questions that we would always say if you're doing your own tax return. Most of the reports coming out of the ATO is in the audits that a lot of people get this wrong, and so obviously we would encourage you to use a tax agent to assess this correctly so you don't make any mistakes. But let's just go through it again, and I know we've covered this topic in the past, but I think it's really important. So let's talk about repairs and maintenance in the sense of when they're incurred and how is that treated by the tax office.
Well, it's a very fine line, and they've tried to reconcile some different cases to like one judge feels this way, the other judge feels that way, and you can't align them. But so I'm doing the best I can here. But the first thing the ATO are looking for is, did that repair need doing when you bought the property? So repairing is bringing it back to the state it was in when you bought it. Just because it's repairing the house doesn't mean it's a repair as far as the taxman's concerned, because it's an improvement beyond what the state it was in when you bought it. It's a capital improvement. You're making it worth more than what it was when you bought it. So some people will say to you, oh, don't paint the house for a couple of years and otherwise you won't get deduction. Well, that's not the case. If it needed painting when you bought it, then it doesn't matter if you wait 10 years. In theory, that painting is not tax deductible. It goes in your cost base for capital gains tax purposes. So that's the first trap. Is it an improvement beyond what it was when you bought it? In another way, is it replacing a metal roof with tiles, that sort of stuff?
Yeah, and I think you've got a couple of examples, but can I just take one step back and talk to a lot of investors who aren't educated in this space? Yeah, they potentially do buy an ugly duckling, and before they decide to rent it out, they go through the property and make some not only repairs, but they actually make, to your point, some improvements or big replacements. Now, because that property wasn't available for rent, effectively that's a clear challenge for that owner in terms of the claimability of what they do to sort of get it ready for leasing. Is that a fair assessment?
Yeah, well, that's clearly improvements beyond the state it was in when you bought it, and the fact that it's not available for rent. But not to scare people too much for that, like if you're between tenants and you decide to paint, as long as you listed it and they can still come and view it or whatever, you can still claim the deduction and all the expenses for that property in between that.
So in between tenants, but in terms of buying it for the first time and leasing it out for the first time, that's that nuance that we're talking about there, in terms of, in some respects, if you feel like it does need a lick of paint, or you feel like you're going to rip the carpet up and polish the floorboards and those types of things before you've ever let that property out. Tell me about those nuances.
Yeah, well, there is none. You've improved it. There's the thing with carpet, if you put other carpet down, because carpet, unlike everything else we've been talking about, is plant and equipment. So you get to depreciate that over 10 years. So the new carpet would qualify, but it'd take a while. But
whereas the painting of the house, to your point, if it's the first time before it's ever been let, that is a capital cost. So that will be.
Yes, it's well. What was it doing? Just because I don't like that blanket word, ever been let. If you've just bought it, yes. But if it was your home beforehand, then in theory you're getting it ready for the tenant and cleaning up after yourself, so still not deductible. But if you you've got your tenants in there and then you paint the walls. So brand new house, you lived in it for 10 years, needs painting, you put the tenant in there, and that year you've had a tenant all year, that financial year that you painted in, then you're going to get a deduction. not doing it before the tenant moves in, just cleaning up after yourself, but after, you're going to
Yep.
get a deduction because for the whole year it was used to produce income, and the painting became necessary during your period of ownership. Oh, let's smile. I've got a little bit of deduction here.
I love it. No, I love it because it just shows that there is nuance and there is some of that complexity. So all the better reason to jump on a phone call with your tax accountant and basically have a quick conversation before you do something around, what are the consequences around, this is what I'm thinking about doing, this is what I'm planning to do, and you'll get some advice in terms of, and also some advice around how you document that, and basically, so that at the time you then put your claim in, you've got all of that record keeping and everything in place.